In today's episode of the Construction Hot Takes podcast, I'm going to be talking about something that's really near and dear to me as a former CFO of a construction company and as a construction consultant now. And that is, how do you get your monthly close from, let's say, 25 to 30 days down to a more traditional and more standard 10 to 15 days? The answer that we're going to talk about in this podcast is by using AI technology for construction accounting. AI technology is helping people all across the country at construction companies take their data in real time and make it faster, better, and more efficient. And so if you stick around for the next 15 or 20 minutes, we're going to talk about some of the things that I'm seeing with my clients across the country and some of the things that I see in the AI for construction accounting space. So I wanted to maybe start with what is a monthly close process, just give some definitions out of the way. A monthly close process is the process by which the accounting team, generally the controller, the accounts payable, the accounts receivable staff, works to reconcile all of the transactions that have happened in a month. How do you update your work in progress or your WIP report? How do you reconcile credit card statements? How do you reconcile job costs? And put that all together to close your books so that your books are final, approved, reconciled, and then that data can be turned over to either the owner, the ownership of the company, a bond company if you have a bond. It just verifies that all your data is reconciled and accurate, and then you can move on to the next month. And what a monthly close does, of course, is let you know how you did the previous month. The controversy with the monthly close is that it can take a long time. Outside of construction accounting, the general sense is that a close can happen in between 5 and 10 days. I've been doing this for a long time, and if you are a construction company and you're a controller and you're closing your books in less than 10 days, huge kudos to you. It's rare because our world is very specific to a lot of pieces of data that come from a lot of different places. So we have credit cards we have to reconcile. Has everyone given you their receipts? We have job costs that have to be reconciled. Has everyone approved their invoices? We have requisitions that have gone out. Have they been approved by the client? And so on and so on. And so a monthly close in construction, while the goal is between 10 and 15 days after the end of the month, what I see with almost all of my clients is the close happens almost 20 to 30 days after the month, which means most companies are running 1 month late, right? A month later, you still are waiting for your data from the previous month. And that is hard to make business decisions. It's hard to know how you did. It's hard to track gross margin, et cetera, et cetera. And so one of the things that is really important to people is having a monthly close process that is as quick as possible while still being accurate. And so that's kind of the topic is how do we let AI, which is this new frontier that we're all living in, how do we let AI make our monthly close process more efficient? The first thing to say is, what is a continuous close that I referenced earlier? A continuous close is really always being ready to close your books, but it doesn't mean you close your books daily. What a continuous close is having accurate data at all times. In a standard close process, you wait 30 days as let's say the controller, and then at the end of that period, you're doing everything else you have to do, right, in your job. And then at the end of the month, you start working on trying to get all the data you need. Going to your operations teams and saying, I don't have this. Going to your staff and saying, have you reconciled this credit card statement? You're kind of playing catch up the minute the month ends. And what a continuous close does is allow you to do that in real time throughout the month. How does AI help you do that? So AI helps you do that in a few ways, but really a monthly close process is nothing more than having accurate data at the time that you need it. And so what AI can do through things like, AP, AP invoice capture, better workflows, better approval workflows so that you have data, that's accurate, being able to have context at the time that you get data from your operations team. all of that can happen in real time with AI because our technology lets us have better data more accurately in a faster time. Instead of playing catch up, which is what we're doing now in a traditional sense, AI technology is letting you have better data when you need it. And your AI systems across, whether it's in your ERPs, your accounting systems, or your project management platforms, it's letting you see your data more accurately in real time, so that instead of at the end of the month playing catch up, all you're kind of doing at the end of that month is reviewing what's already been vetted. And that's the concept here. When data flows into your accounting system accurately the first time, you as a controller don't have to go back and reconstruct what happened that month. You've done it as you go, and therefore, when you close your books, you're hopefully spending a lot less time with a goal of getting the data out to the management team, back to the ops team, and you're making it easier for everybody to make decisions for the business. So one of the important things maybe to talk about now is what's driving this shift in allowing AI to help us in construction accounting. The answer is pretty basic. Automation. Automating everything in accounting is really important. When bad data gets into your system, it has to be corrected later. When bad data somehow gets by your AP specialist or your AR specialist or your staff accountant or your controller because they were given bad information, or your operations team is just too busy to give you the best data when they have it, bad data gets into your system and then has to be backed out, right? We can't close our books with bad data. So what automation does, it lets us check data in real time as it goes into your system. And an AI system, for example, could flag bad data, right? Looking at historical data, using trends of your previous information, everything you've already loaded into your system. It can help you look at trends faster. It can help you spot bad data faster. And if bad data never gets into your system, you never have to correct it. At the end of that month, all you have to do is verify what you've already seen, and you can go from there. Real-time financial insights is the key to letting AI help your accounting staff and you as a controller, you as anyone who works in construction accounting. AI is the key to help you track your data in real time better, faster, easier. And then at the end of the month, you're not running around trying to pull all that data and verify it. It's already been verified. So that's really what's driving this. And AI is being used across construction, right? It's being used in safety. It's being used, drone cameras. It's being used to look at job sites. It's being used in field technology. It's really interesting what's happening in this space now for construction accounting. A lot of where the AI, world talks about is in the software. So, whether your software, if you have an ERP that has AI built into it, if you have a project management platform that has AI built into it, like Procore, which has made big strides and put a lot of money into AI, your software having a built-in AI function is really where the industry's going. And using that technology to be able to then harness better data from your team is really the key to all of this, right? So the output of all of this, if we think about AI as a tool for use in construction accounting, and in a way to have let's call it a continuous close. And by the way, a continuous close does not mean you close your books daily. It does not mean you're reconciling every time a credit card charge comes into your bank. You're not reconciling it. It doesn't mean you're working harder during the month, so you have less work at the end of the month. A continuous close means that everything is staying in alignment at the time that the data comes to you. All of your open AP is, being verified in real time. Your requisitions are being tracked against what was actually billed and what was actually sent to a client. Your revenue recognition is being done in real time. And at the end of the month now, you're not playing catch up, like I said before. So all of this AI technology that we're talking about is really working, and that's the automation of of what this is, right? Automating your systems using AI technology to give you better data in real time. Where's this all going? Well, it's really going towards one thing, which is the point of this podcast, which is to say, how do we have a shorter close window? So where's all this going, right? Automation in construction accounting. It's going towards having a shorter close window. And a shorter close window means that you can spend more time during the month as a construction accounting staff working on, let's say, strategy or analysis or real-time data transfer back to your operations team who maybe needs to know, being able to communicate with the field to let them know how things are going if that's how your company is set up. A shorter close window gives you the ability to not run around the first 3 weeks of the following month like your hair is on fire, right? To turn a phrase. It's a steadier, calmer way of closing your books. And I know that's what everybody would want. So I think a couple of things will happen if this continuous close takes root in the construction accounting world. And that's going to be, the role of the controller is going to change. AI is never going to replace humans. I think we can probably say that with a lot of certainty. What AI is going to do is give a construction accounting team more tools, more certainty, and more time. The role of the controller is going to shift from being an investigator and a detective at the end of the month for the next 3 weeks. It's going to shift that role over to someone who has more data at their fingertips, who has more time to sit with those numbers, who has more time to work with maybe a CFO and a president of the company to talk about what the numbers mean. You're not going to be crazy for 3 weeks out of the month, or maybe even 4, rush to get your data put together, sent out, and then start the whole process over again. And that's really the point of what we're seeing in AI across the whole industry, is how to make things better, faster, and more efficient. I think there's a couple of takeaways from this that we can talk about as construction accounting people and as construction business owners who are looking for a more efficient way to run their companies, right? I think the most important is we're not looking for a faster close at the expense of accurate data. That to me is the most important thing that we're talking about here today. A continuous close or an AI-aided close is only going to do the work in real time instead of waiting until the end of the month. So your data is as accurate as it always is, hopefully. You have more engagement between your accounting team and your operations team, and you're finding problems sooner than later. Like I said before, a lot of times we construction accounting people are detectives. We have to go back and we have to search and investigate and seek out what happened. What was that? Why is that wrong? Why did that change? I don't understand this. The goal is to have better information and have it sooner so there's more time to answer those questions if they arise. AI for construction accounting is about timing, not speed. Speed is, I would say, an afterthought here. I don't know any construction company owner who does not want their data for the previous month as fast as they can, say 5 or 10 days after the month ends, so they know how they did. Are you on budget? Are you on margin? Is everything tracking the way you thought it would? But I also don't know any construction company owner who wants data that's faster but incorrect. So that's what all this is about. Accurate data in a faster way that helps you make a decision on how to run your business. That's the goal. I think in closing, I'd want to leave everyone with a few thoughts about what I think about this. And I've been in construction accounting for a long time. I use a lot of AI tools. I see a lot of AI tools, and they are fascinating to me. The goal of AI is to make our lives a little bit better, a little bit easier, and a little bit more secure in our data. Understanding that the data that we're looking at is accurate. So I think we're in the middle of this AI revolution. I'm not even sure we know, where it's going to go yet, but we in the industry who are looking at AI for construction, we believe that we're right in the middle of it. And what's happening out there is a lot of new tools, a lot of new players, a lot of softwares adding AI into their platforms, a lot of companies who are writing AI as overlays. It's all happening in real time. And I think one of the beneficiaries of all this new technology is going to be the monthly close process. I think the construction accounting people are going to relish this. I think that we've spent a lot of years being stressed out and feeling really a lot of pressure at the end of the month to close those books, to close them accurately. And what do we sacrifice? Time or accuracy? I think AI is it's going to stop us from having to sacrifice anything. So I think the current environment is leaning towards better data, cleaner data, and more real-time engagement of our accounting team with our operations team. And so stay tuned here. We at Ascent Consulting are very keyed into this. We get to do this all day, every day with our clients, and we get to see all the great new AI technology. And I will be one to focus all my time and effort on how AI is helping construction accounting.